picking up good vibrations.
Hi everybody, Alex Deploy here from Expert Forex, and in today's video I'm quite excited because I have a free indicator that I can offer you, and it is quite an amazing indicator because it entails a complete trading system, and I'm going to go through that trading system with you in this video. We've also automated this trading system into a trading robot, and I'll tell you a bit more about that as the video goes on. Now, the indicator we're talking about is what I call the spaghetti indicator, because that's exactly what it looks like. It's just a whole lot of lines that look like a bowl of spaghetti. But it will become clearer as we go along in this video. So firstly, you get a free MT4 and MT5 version of this indicator. And this indicator helps you identify very quickly great trading opportunities in the whole market, because you scour the whole market. We scour 28 currencies at the same time using this approach. And you can also do it in different time frames. If you use, for instance, 4 time frames, you are scouring over 100 trading opportunities in the market very quickly by looking at this spaghetti indicator. It helps you find high probability successful entries, but most importantly, it also helps you find high probability exits for your trades. Now, trades according to a very simple rules, and that's what makes it ideal for beginners. All you have to understand is the concept of weakening currencies and strengthening currencies, which is shown in the spaghetti indicator. So there's no need to watch charts. You can literally just trade off this indicator on a manual basis. What is also nice is you don't have to watch the indicator that much, because there are built-in notifications that are provided in this indicator. Remember, this is a free indicator, so it really is special. There is also a robot trading version of this indicator, which I'll cover later on in this video. But you'll see a lot more than what I've just mentioned. So let's talk about what trading is all about. And on your screen, you can see a typical chart where there has been a trend downwards and then a trend upwards. And let's talk about what happens when you're trading. Essentially, what makes these trends is that one currency weakens or strengthens compared to the other currency. And that's what makes this trend happen. So in this particular case, we're looking at the New Zealand Canadian. The New Zealand has obviously weakened, and therefore it has gone down. And then suddenly it strengthened again and went up, and then weakened again. And then the New Zealand strengthened on a gradual basis and came back to the area it started on, and then it settled down and started trading sideways. So that is how you can tell. Now, it's not only the New Zealand that's weakening or strengthening, it could also be the Canadian that's weakening or strengthening. So the same story that I've just told you now could be here, that the Canadian has strengthened considerably, and that's caused that downward trend. And then it weakened, and then it strengthened again, and then it weakened considerably as it went up. That particular trend, and that explains that movement. So it's either one of the currencies weakening tremendously and the other one strengthening, or the other one strengthening. So trading is all about weakening currencies and strengthening currencies. That's all it is about. And I know there are books written about how to trade and all that, but that in a simple format is what trading is all about. Anticipating the weakening and strengthening of currencies. So just to repeat, we are trading a strengthening currency against a weakening currency when we trade. Or we're hoping to be trading that. If we get it wrong, obviously we will get stopped out or so on. But that is essentially the trick of trading. Now, while I was making this, while I was preparing for this video, I suddenly realized a major filter that I introduced very early in my career, about 18 years ago, that I think has really impacted my trading results, because I have had incredible success from trading in those earlier years. And as I say there, I think this is an epiphany. I never realized that this is actually what caused the success that I had. And one of the things that I introduced very early in my trading career is the concept of strengthening and weakening currencies. And I decided I will never trade two currencies that are both strengthening or both weakening, because what you want in trading is you want a turbo effect. You want them one to be weakening and one to be strengthening, or the other way around, one to be strengthening and one to be weakening, because then you have a turbo effect. If you're trading currencies that are both strengthening, basically what will happen is the price will go sideways. Or if you have two currencies that are both weakening, the price will go sideways. So that was an important filter. So before I entered a trade, I would go down my checklist and say, are these currencies both weakening or both strengthening? And I eliminated an incredible amount of trades because of that simple item on my checklist. But that's not really the topic of this video. I just had that epiphany as I was making this video. So how we try and measure the strength and weakness of currencies is we have a tool called the 360-degree indicator. And what it does, it measures the pips gains against the pips lost of a currency against all of the other currencies in the market, and it's mainly the 8 major currencies. So what you see here is you see the pips gains on a 3-hour, 6-hour, 12-hour daily basis, weekly, monthly, and 4-hour, and you can then see really very down to the last pip how much a particular currency has gained over the last while or lost during the last while. Now, if we take for instance, the movement over the last day, we will see that the yen has strengthened tremendously compared to all its other trading partners. And then if we do a further analysis of the day, you'll see that the yen has strengthened compared to all of its other partners, and that the franc, for instance, has weakened compared to all its other partners. And so that's the value of this particular schedule. And then if you look at the yen compared to all its trading partners, you can see that it has actually gained, the green has gained against all of its trading partners in most of the time frames. It's just occasionally, like the euro, there's an area there where the euro was better than the yen. So this little tool is very valuable, but it's all numbers, and you battle to actually get a feel of what's going on. But you get a general feel the yen's good, but you don't get an overall feel. So that's where the spaghetti indicator really adds value, because it is a visual presentation of what you're seeing in this table. So let's go and have a look at the spaghetti indicator. So the spaghetti indicator measures the strength and weakness of currencies, and there you can see it. It has a zero line over there. So all the currencies above the zero line are strengthening currencies, and all of the ones below them are weakening currencies. So it's very quick to see which are the strengthening ones, which are the weakening ones. Then the next thing that one can look for is which are the strongest and which ones are the weakness in this particular time frame that I'm looking at. I'm not sure what it is. It might be a 4-hour time frame. In the 4-hour time frame, this currency is the strongest and that one is the weakest. So that's a lot of information. You don't want to get involved in these currencies in the middle here, because they are the ones that I say will trade sideways. They are weakening or strengthening, not sure. But these we know have weakened tremendously and strengthened tremendously. Secondly, what we know here, if you look at the direction that it's showing there, although it was strong, it is weakening, starting to weaken. Although this one was very weak, it is starting to strengthen. Now that is the trading opportunity that you will see when using the spaghetti indicator, because the actual concept is that no matter how strong a currency gets or how weak it gets, eventually it will come back to normal. So there's an example of a strong currency, that red currency, and there's a strong currency, the blue currency, and you'll see they eventually meet up. They actually cross at some stage. So strong currencies and weak currencies do not stay that way forever. And this is a prime example of why the spaghetti indicator is so important. It needs to find those exceptional currencies that are overly strong and overly weak, and you just trade those, and eventually they'll meet up and become neutral again. And that is why this is a great beginner's system, because it's so easy to understand. You're basically just looking for peaks and valleys and trading them against each other. Now let me show you a couple of examples of typical trades using the spaghetti indicator. Now in this example, I have blocked out all the other currencies. I'm only looking at two currencies at this stage. This is the New Zealand CAD, and the New Zealand is the purple and the CAD is the green. So what happened here is that there was a crossover. In other words, the Canadian went weak and the New Zealand went strong. And the beauty here is that the New Zealand stayed strong for a very, very long time, and the Canadian stayed weak for a long, long time. And what then happened is you had this fantastic trend that happened because of that. And it was a 630 pip trend, and these were as we say automated signals, because there is the crossover, that's the buy signal, and there's the exit, which is the sell signal. And that's the beauty of these spaghetti indicator. It actually gives you the entry and the exit. So that is one example of using the spaghetti indicator to find entries and exits. Let's have a look at another entry. Let's have a look at another example. Now in this example, we're actually using the extreme readings, and this is the one that I like using when the readings become extreme. So that's extreme and that's extreme, and they start turning back. So they start turning back like that. That is a trading entry. And you would then enter there, and you'd basically be trading against the trend that existed before the time. So if it was a sell trend, you'd be buying. And that's also a very strong entry for the spaghetti indicator. And all you then do is you wait for the two to cross, and that's your exit, and there you are. So this was again a 750 pip move that was caught by the spaghetti indicator, the free spaghetti indicator, by the way. Okay, so here's another example of the crossover approach, but using the extreme as exit. So there was the crossover. It was a really good entry there. And as you can see, the one currency stayed strong throughout, and the other one stayed weak throughout. And what happened is they got the strong one got even stronger, and the weaker one got even weaker. And again, that's the opposite of what we saw earlier. That is a potential exit entry, because you're saying, though that extreme strength and that extreme weakness cannot last forever, I'm going to get out of my deal. And that's exactly what happened here. If you say there's the entry, there's the exit, it started reversing. That was 1,550 pips. Now that's a huge amount of pips using a very, very simple trading approach. So let's have a look at this indicator in a little bit more detail. All right, so firstly, I normally trade with 8 currencies, but when you're starting, you might find it too much like spaghetti, and you might only want 4 currencies like shown over there, or you might even only want 2. So the indicator itself is very flexible. You can adjust the number of currencies you want to see and the colors and all that type of thing, so that you don't have to get too confused. I mean, that does look like a bowl of spaghetti, whereas here, very clear, there's the peak on that one, there's the peak on that one, that's a trading signal, there's a peak, so and they this one's weakening, that one's strengthening, all trading signals. So you can see trading signals wherever you want using this approach. But the point is, you don't have to trade 8 at the same time. You can trade 2 if you want. Okay, so now here's an example of what I do. I trade multiple time frames. So I look at the daily time frame, the 15-minute time frame, but my main trading time frames are the 4-hour and the 1 hour. So I would really look at those, and here are some really good trading signals. You can see there the green and blue. very strong and then now weakening. That one very weak and now strengthening. So beautiful trading, easy to spot. Anybody can see that. Beginner can spot that kind of signal. And there we go. So that was on the 4 hour. On the 1 hour, nothing much there. There was a fantastic signal quite a while ago where the blue came back and the orange came back, and there was again similar signal to up there. Similar signal because the 1 hour refines the 4 hour. And then you can also see here on the daily, the purple is going from a very strong position downwards, and the green is going from a very weak position upwards. So again, just the signals just jump out at you all the time, because what is happening is you're monitoring 28 currencies at the same time when you use this. You use, because although there's only 8 currencies involved, we are monitoring all the crosses involved in those 8 currencies. And here's the 15-minute. 15-minute is consolidating at the moment, which actually is a signal not to trade. When the market consolidates on the 0 line, it means it's basically uncertain. It's basically going to the 0. Wait for the extremes to happen before you trade. So there's a whole lot of things that you can read into these. But this is my trading setup. Trade 4 hour, 1 hour, use the daily as some guideline and the 15-minute as some guideline. So you can set this up any way you want. That's my particular. You will notice I don't even look at the trading charts. I only look at the Spaghetti indicator. And here's an example again of trading the extreme signals. So there are some extreme signals. Now, how do you know it's an extreme? You only trade when it comes back. You only trade when it comes back, and then where do you exit? You exit when those cross again. So that orange would have crossed over there, and you exit. So there it comes back. So easy, and you exit when the pink crosses the orange, and there you are. There's your exit. So how easy is this as a trading method? So easy. All right, so there's another extreme. It's coming back. You enter. You wait for the blue to cross the orange, and boom, there you are, and you exit. Simple as that. Again, here's another example. Extremes, orange seems to be popular, and the pink. Again, you only enter after it hooks back there, and you enter, and it then crosses over, and you exit there. Very simple technique, nothing complicated. A beginner can do that. An experienced trader can do that. An experienced trader would know what they're doing, because they're trading weakness against strength. That's what trading is all about. You can color the readings any color you want and bold them as much as you want. So that is a very light bolding. There's a very dark bolding. And you can even color specific ones. A particular, if you're watching a specific cross, then you can color that dark, and the rest can be in the background. So you've got full flexibility with this free indicator. Oh, it's the most beautiful indicator ever. Okay, then there's a few other little features, like it will give you arrows. So it does draw arrows, like there we go, and there's an arrow which says sell now, mate, because you can see there's the sell signal, and there's the extreme reading, and there's the arrow. So really it actually makes it a lot easier. You can program it to have arrows to tell you, hey mate, this is when you should be trading. Now, furthermore, this has got notifications. You can have alert notifications. You can have sound notifications. You can have mobile and notifications, and you can have email notifications. Isn't that just great? You don't even have to watch the Spaghetti indicator. It will tell you when something's going on. Really, really great indicator to be free. And then obviously you can select your currencies. If you don't want to trade all the currencies available, the eight currencies, you can then just change the settings to say no to the ones you don't want to trade. And there are the colors. You can select the colors as you like, and as you've seen, you can actually select how bold you want those color lines to be, and so on. So this indicator really does give a trader everything the trader needs. Now, there are 4 ways of determining the strength and weakness of currencies. They're shown there. I will make another video to explain those 4 ways in a little bit more detail. I use the RSI MA combination. That gives me the best readings, and that's the one that I like. But you can actually use any of those and experiment with them. You'll find you'll come back to the RSI MA1. And then you can also change the actual settings for the various indicators, and you can make them more sensitive or less sensitive depending on what your particular needs are. Again, I must probably cover that in future videos, depending on the interest that there is in this fantastic indicator. Okay, so now the next question is, how do you get your hands on this particular indicator? Again, it's a free indicator, and that is why it's on our free forum. You just go down to the free forum. If you're not already a member, just join for free. It's a free forum. And then what you do is you would enter on this page. You'll see free robots and indicators. You just click on that. Then you download free indicators, and you click on that one, and then download your free Forex tools, and that's what I've just done. So you click on that one, and there we are. Download the free Spaghetti indicator right now. And as you can see, there have only been 5 views. I have just listed this indicator. It is brand new, it is fresh. It has been around for 5 years, but it's the first time I'm making it available for free. So please take advantage of this offer and go and download it for free. You just click on that, and as you can see, I've listed this 2 hours ago, and you just read through that particular post and download it. Very easy to do, and follow the download instructions. Now, as I've mentioned earlier, we've also automated this approach. You can see there's the Spaghetti indicator. We've automated this approach in a robot, and you can go and have a look at this robot. A link to this robot will be in the description of the video, as well as in the first commentary of the video. Go and read all about it. Fantastic. It explains this particular approach a lot of detail, explains the settings that are available. There are also plug and play versions of this robot available, and there are also MT4 and MT5 versions of this robot available. But go and watch the videos that are on this page. Important because what we do is we actually put all the training for our various indicators and robots on the actual web pages, and you can then make a decision on whether you want to do that after you've actually gone through the training for this particular EA. And this particular one has a 30-day money-back guarantee, so you can go in and trade it for 30 days, and if you do not make a profit, and we're so confident that you will do, we will refund your money. So it has a 30-day guarantee. Now, I hope you've enjoyed this video. I'm quite excited about this concept. Please go and download the indicator, go and play around with it, load it into different time frames as I've shown you. Take the trades as they're shown. Don't be scared. Take those trades and enjoy the benefits of this particular free indicator. And also have a look at the automated version in robot form. So from me, Alex Deploy, cheerio.